Damian Harrington, you are Head of Research, Global Capital Markets and EMEA at Colliers. Thank you for joining us on BiTV.
My pleasure. It's good to see you again. Thanks for inviting me.
Nice to see you again, indeed. We spoke last December on BiTV, and at the time, Colliers was anticipating, and I quote, the process of stabilization of the global real estate market to take hold by mid-2023. We are fast approaching mid-2023, and in your recent market snapshot, we see that the EMEA capital markets, such as France, the UK, Germany, or even Spain, experienced significant drops in investment since the beginning of the year. How do you explain this difficult market environment for European real estate in H1 2023?
Okay, good question. There's not a straightforward answer to it, but I think in principle, when we said we expected stabilisation to take hold by middle of this year, we did caveat that by saying, but based on the journey so far, I think many of the things that have happened we anticipated to happen, but there's a couple of things that have happened that we didn't quite anticipate, which is kind of what we also anticipated, if that makes any sense. But so look, a drop in volumes we certainly anticipated, because when we're talking about stabilisation, we're basically talking about when the market hits bottom. And given the journey of interest rates, the difficulty around really understanding what's going to happen with inflation and when it's going to diminish, and that there's so many kind of facets to that, it makes it difficult to understand when pricing will stabilize, because only really when pricing starts to stabilize or investors can price in markets will they start really re-engaging in markets. So until that happens, anticipate a drop in volumes, and we've seen that cycle after cycle. So no real surprises there, but there's still activity in the markets, so it hasn't completely dropped off a cliff, which is good. But in terms of that, that pricing journey, I think there's been a couple of other shocks. Obviously, the news around the banks in March in the US, and even with Credit Suisse, that's shocked the markets a bit. Again, I think what we're also seeing is differences in global regions in terms of fundamentals that we need to sort of disassociate from each other a little bit, because it's not always the same. But these little shocks and factors also will spook investors naturally. So activity stalls a little bit further before they're comfortable getting engaged in markets again. But it's really about inflation, certainly for Europe. It's proven to be very sticky, as we know. I think last month was the first time we really see a consolidated drop in CPI rates across multiple markets. I think we've seen it again for this month. We're seeing news about certain supermarkets and dropping their food prices, and some of them are being blamed for profiteering, etc. Similar claims thrown at the energy industry. So when real prices start to drop, then inflation starts to drop, then the future of interest rates becomes clear. Continuing to decline this year before dropping off at the end of this year into next year. So this journey, yes, stabilizing and taking hold by mid-2023. It's maybe drifting a little bit towards the end of the year, but again, it just depends who you are, what your activity is based around, how your capital is sourced, your access or levels of leverage, as to whether you'll re-engage in a market or not. But there are certain signs that in some sectors and some markets, they are already starting to come back. And there's quite a lot of activity happening around working through deals, which is a positive.
Yeah, because you talk about maybe activity coming back maybe further down the year. If we look ahead, would you say at the moment that real estate investors in Europe are maybe more in a buying, selling, or maybe still stalling mode at the moment? And what do you project on that front going forward?
Well, it's a bit of everything. So there's some investors are in buying mode. There's still capital being raised globally, and in Europe, there's been further capital raising in Q1, and that would actually put us on a par with previous years if capital raising continues at this level. So there's still a lot of dry powder that's in the market that hasn't been invested. So there's still a lot of capital out there that wants to invest. It's just about getting the right product at the right price at the right time. But there's for sure there's investors who are willing to sell, whether that's triggered disposals through termination of closed-end funds or assets that just no longer fit their strategy. And I think more and more going forwards, we'll see ESG becomes a big part of that. I know from the report we did at the end of the year, 20% want to dispose of assets that don't conform. So as well as buying and selling, you've also got in the middle where it's about retrofitting and putting capex into assets to upgrade them. So that's now become a kind of bigger feature of what investors are doing. So there's a lot of activity happening around that space, and we'll continue to see capital going into all those elements or activity in all those elements of the market.
Okay, and speaking of activity and level of activity, shall I say, not every asset is created equal. If you'll let me say it like that, what are the different maybe sectors? What are the main trends that we can expect for the rest of the year in terms of sectors, in terms of geographies also? How do you see this renewed activity being carried out on the European market?
Yeah, I mean, I think if we look at it by sector, we also need to look at the kind of repricing that's happened already, and even not just since, not in the last 12 months, but even further back. But certainly the last 12 months, industrial logistics has repriced more aggressively than anything else. So as a sector, if you look at the spread to rates, it's at a much higher level than other assets. Industrial logistics tends to come back quickest when the economy starts to recover, so demand picks up, and plus the fundamentals for logistics in Europe are really, really strong. Sub 4% vacancy, very limited speculative development, so values are being fundamentally kind of supported and even driven through rental growth. I think retail is interesting. Retail's gone through years of repricing, years and years. It's now quite high yielding. We've actually seen retail investment really pick up proportionately relative to other sectors, even in the last quarter and even before that. And that's actually globally, not just Europe. So again, investors are looking at different pockets of real estate where they can get value or where they can get growth, and they're picking both of those things up. Offices are still in high demand. Demand has been sustained for offices at around about 35% of volumes. There are question marks around it, but again, what's happening in the US is very, very, very different to what's happening in Europe. Vacancy is still pretty low on average. Densities are quite high in terms of how we use space. Agile working has been with us for a long time. It's not a real new phenomenon that's changing the way workers think about getting to work, which is what's happening in the US. Vacancy in the US way off. It's like 20, but it is about having real high quality assets that are energy efficient, that are flexible, that suit what the modern occupier now needs and wants from a regulatory perspective as much as the landlord. So there's a real scarcity around offices, which is driving prime rents. But there's also that bifurcation, which is the buzzword. So anything that's not good quality or can't be upgraded to that level is going to start seeing a discount on pricing. So you're going to start seeing that bifurcation everywhere. But yeah, I think in terms of key sectors coming back, it's those. I mean, there's obviously a lot of interest in alternatives, but I think logistics will come back quicker than anything else.
Okay, thank you very much, Damian Harrington, for taking the time to speak with us today and for this insight. Thank you all also for being with us. We'll see you soon on BiTV.